Hello, everyone. My name is Phil Kaser, overseeing biz dev here at Enerflo, and joined by my co-host Doug Pierce, head of channel sales at Sungage. We're super excited to share some updates with all of you today on some Sungage specific products and how those products work in today's market. There's definitely been a lot of changes over the last year, but Sungage has proven time and again that they're here for the long haul. So excited to hear their updates, and you'll all get to hear some key insights from Doug Pierce in a minute. But by the end of today's webinar, everybody should have a good understanding of the latest Sungage products and how easily you can access those inside the Enerflo platform. So without further ado, Doug, maybe take 1 or 2 minutes, get everybody up to speed on who you are and all things Sungage.
Perfect. Thanks, Phil. Yep. So as Phil mentioned, my name is Doug Pierce. I'm the head of channel sales here at Sungage. I've been with Sungage for a little over 8 years and in the solar space for about 16. So I've worked in home improvement, worked at an EPC sales and installation company for a while, and then came to Sungage a few years back. So really excited to talk to you guys all about what we've been doing over the last 15 years of Sungage being around. But start a little bit about kind of where we started. So in 2011, our founder, Sarah Ross, was looking at solar for her home in Massachusetts. And she was excited at the opportunity to add solar to her home, but found at the time all she was offered was you can purchase this with cash, or you can do a PPA or lease of sorts. And she thought there's got to be something in the middle there with a loan option. Partnered with a local installer in Massachusetts and started lending her daughter's college savings for a proof of concept. And billions of dollars of solar loans later, here we are. And her daughter's been paid back. So happy to know she can go to college. But fast forwarding to today, we're really here as the largest installer fintech here in the solar space, with a really long-standing track record of residential solar loans. And as I mentioned, we've done a few billion at this point between solar and battery, and a little bit in the home improvement space as well. A few years back, we formed a partnership with Carlyle, and the Carlyle Group is really a strategic investor for Sungage and a funding source. And the byproduct of that allows Sungage to be fairly stable from a financial perspective, but also we have a really diverse funding stack here at Sungage that makes sure that when you guys are ready to get paid for your projects, we've got money set aside for you guys to do that. Been a great partnership with Carlyle, and we've essentially got a kind of a bottomless lending capacity, which is a very unique thing, particularly in today's climate inside of the solar financing world. Really what we've done since the Big Beautiful Bill is kind of looked internal to all of our products at Sungage and really adapted our product offerings to align with a post-25D world. And it's kind of a spoiler to some of the stuff we're going to talk about later. But with a couple different partnerships and loan structure, we're able to get our installers generally a monthly payment that's very, very close. In some markets, it beats it. In some markets, it's a few dollars more expensive. But we're really on parity with traditional TPO financing, which is really exciting. And that's through a combination of partnerships and adapting our products to really meet the market where it is and make sure that we continue to be a stable partner for you guys. We have a long-term commitment to residential solar lending and ownership for our homeowners. We just truly feel it's in their best interest to own that asset. And we've really doubled down, excuse me, in the last year on the solar ownership side of things. And we're seeing a lot of exciting results from that change. Yeah, that's all of us here at Sungage. I'll kick it back to Phil to talk a little bit about Enerflo.
Awesome. Thanks, Doug, man. Appreciate it. Yeah, so for anyone on the call who's not familiar with Enerflo or has not used Enerflo before, Enerflo is essentially the operating system for residential solar. So we were founded back in 2019 by two wildly smart individuals who had a vision to make solar more affordable and accessible to every human on the planet. And since then, we've continued to deliver on that vision, over the years. Which has allowed us to earn, the trust of the biggest names in the solar industry, and ultimately resulted in over 15 billion sold and installed through the Enerflo platform. So, as I just mentioned, our vision is really to make solar more affordable and accessible to every human on the planet. And we do this by creating efficiencies in the installer's process from lead creation all the way through to PTO. And we do it through something I like to call tech consolidation and automation. So most installers out there, kind of look like the left-hand side of this slide here, where, you could be utilizing anywhere between 8 to 12 different pieces of tech to run one single project. It can create a lot of inefficiencies, create a lot of errors or, just issues down the line. Because what you're ultimately doing is you're recreating customer information into multiple different places. So what Enerflo does is basically, like I said, we'll consolidate and automate a lot of those resources. We also have a lot of resources already built into the platform to help streamline everything for you. So essentially, when you start utilizing Enerflo, instead of using 8 to 12, you really trim it down to maybe about 4 or 5, or essentially cutting your tech stack in half. So that's where we really focus and really thrive inside the Enerflo platform is through power of integrations. So as an installer, when you utilize Enerflo, you're essentially getting an open platform to build and configure your process, or setting up whatever you want your process to be through one single source of truth. All right, so let's jump into some poll action here. I know Rebecca has some questions teed up. So go ahead, everybody on the call, feel free to go ahead and click through those, and we'll show the answers in a second. But I'd say these poll questions are pretty timely, Doug. Obviously, we're coming up on 1 year anniversary of the One Big Beautiful Bill, as we were just talking about, and a lot has changed since then. There was a big shift over to TPO. I think TPO handles about 2/3 of the market now, and I think a big part of that may have been just the uncertainty on how to position solar without the ITC, but even in today's market, there's still, with rising utility rates and a lot of other factors, there's still plenty of opportunity for traditional financing. So I don't know what your thoughts are on that.
Yeah, it's been kind of interesting. So in a lot of ways, once the big beautiful bill rolled out, loans and ownership really kind of know their fate, right? There's not a lot of complexity in how we go to market. And the fact that we do not have to go through the FIAC or domestic content world actually provides a decent amount of benefits to us and our partners overall. Mainly, what we've seen, and we did a webinar in, I believe it was like October, November of last year, with some predictions about what we thought was going to happen in the market. And what we generally found is we were pretty sure that FIAC and domestic content equipment were going to be more expensive. That's proven to be true. We thought supply chain was going to be constrained. I think to some degree that's true. It's been a little better for a lot of folks, which is good. But I think the most glaring is the tax equity market, which really interacts with the tax credits that are available for third-party ownership. And it's been a really volatile market. And a lot of the things that we've seen fall out with TPO providers in general are a result of them having to figure out the complexities of tax equity. So things like pipelines getting repriced, long delays, and you guys getting paid at the end of a project, all those types of things are generally a result of the tax equity side. And what we found is through partnering with non-FIAC equipment, there's a 30 to 50 cent per watt reduction in the overall balance of materials that you sell. And by incorporating that into a loan, monthly payments can be really similar to TPO. So what's interesting is, I feel like the tax credit is something we've all sold on for a long time. It's like a warm blanket. It's something that feels good. But the reality is we really don't need it. And we're finding that we're able to beat the utility, even in places like Florida, without an ITC. So, really, yeah, lot of changes in the market, but in a lot of ways, loans and ownerships models are still working very similar to what they did before.
Yeah, that's great. Yeah, looking at the results from the poll here, it looks like there's a good chunk of people here that still, like we were saying before, it's heavily involved with lease PPA today, but looking to grow their ownership mix, so looking for different opportunities there, looking to learn more about the different products that you have. Looks like all the above is of interest, and where do they see the biggest opportunity improvement in residential solar right now? And it's improving cash flow delays and operational efficiency. So I'd say that's kind of a good opportunity to kind of like segue into all the items that you want to talk about today.
Sure. Yeah, so I'll start with just some kind of foundational pieces of Sungage that you just get as part of the standard offering, right? We want to make sure that we're keeping ownership within reach for homeowners for a number of reasons. One, people own their homes, they want to own their power generally. And, so from our perspective, ownership gives homeowners the most flexibility. And so we're really focusing on that as our core strategy here. One cool thing about our loan is it's always a soft pull on the credit inquiry. There's kind of a dirty secret inside of a lot of fintechs where it'll start as a soft pull, but then once you go to fund the loan, that inquiry converts to a hard pull. With Sungage, it stays as a soft pull the entire time, so that inquiry never shows up on the credit report. To the topic of cash flow, this was never something that was a competitive advantage until recently, but we pay 90% of our projects within 2 business days. So what that means for you as an installer is our photo requirements are very minimal. We have you take a picture of the array on the roof. If you've got a battery, you take a picture of the installed battery, you take a photo of the inverter, and then a photo of the house. That's it. And then we send you your money very reliably. The 10% of the time that we don't fund within those few days is generally when, instead of uploading a picture of the house, you uploaded a picture of the grass. So it's usually they just uploaded the wrong picture. But photo requirements are super easy. We pay really quickly, which from a cash flow standpoint, you're not waiting 30, 60, 90 plus days, as many of you might be experiencing with TPO. Another really unique part to Sungage is we have a really broad underwriting criteria. So we approve roughly 9 out of 10 of homeowners that have a FICO of over 670. It's an instant approval. So you get an approval right after the application. We let the homeowner know what they need to do to close. And we have no debt to income for projects where homeowners have a FICO of over 700. So goal is to try to have as few stipulations attached to those projects as possible. Another really cool feature is, particularly with loan customers, folks are always trying to figure out, can I pay this faster? So one, yes, there's no prepayment penalties, but two, it does happen where there's local incentives and folks want to pay down their loan earlier. We do unlimited reams for our homeowners. There's no cost to that. We just view that if the homeowner wants to pay down their principal and kind of recast those monthly payments, we encourage that and support that throughout our entire process. And you can do that as many times as you want. Also, and we'll get into this a little bit with our later slides, but the way that we structure our loan allows you to have really the lowest monthly solar loan payment in solar. And I'll talk more about how that works later. But the takeaway here is low monthly payment that generally beats the utility in almost every market. So we're able to continue to provide solar savings for those homeowners. And the last piece is ton of flexibility on our AVL, because we don't have to worry about fiat compliance. We're able to have a really broad and wide amount of manufacturers, from batteries to panels to inverters, all the way through, which, allows you to find product that is tier one great product that's at a discount because it's non-fiat. Second is, if there is a supply chain issue, it's a really easy pivot to another product where, you're not stuck with this like very thin, list of eligible equipment to meet the requirements of the TPO side. So a lot of flexibility there.
Love that.
So here on this slide, Sungage has really 3 loans that we offer. The first one is our Sunrise loan. And this is really the only solar escalator loan that's really widely available on the market. And the easiest way to describe this is, if you think of and I'm going to use my arm here, which is weird, but think of like a normal flat loan, like a car loan. You make the same monthly payment across the board. What we do is we tilt that, and we make the payments earlier, lower, and later in the loan higher, and they escalate at 2.9% annually. What that allows you to do, particularly in lower cost utility markets, is get them a solar save early in the solar experience and have an escalator that's lower than a standard utility rate increase. So every year you save a little bit more than the year before. Really, the goal of this is to provide the homeowner with a really predictable cost of their monthly payment. So you know exactly what that monthly payment is going to be every month for the full term of the loan, as opposed to sticking with the utility, which, as we all know, can go up all over the place. The Sunrise loan is available on our 20 and 25-year terms with APRs from 5.99, 4.99, or 3.99. And again, just like on the last slide, There's no prepayment penalties and unlimited reams with that product as well.
Right.
So go to the, oh, go ahead, Phil.
Yeah, no, I was gonna say that, and 2.9, that's the only escalator that's involved with that product, right?
Correct. Yep. Yeah. So really, really simple, same every single time. And we used an example here in Pennsylvania. I believe this is which one this is, where you can see the monthly payment of all of our different products. And the goal, if you see that kind of yellow line there, that's the monthly payment increase for Sunrise, and you can see the utility increasing much faster than that. We also have two other products, which I'll get into on the next slide. But we have a Bright Start product that you can offer as a flat AM loan, where it's just the same monthly payment for the whole term. We call that level pay. Or you can defer up to 50% of the project. And we see that generally when folks are in a market like New York or Illinois or Hawaii, where there's some sort of state incentive that you can add in. And we'll defer those incentives up to 3 years. So low monthly payment to start, then at year 3 on the next payment, it increases, or the homeowner can give us that incentive and keep the monthly payment exactly the same. So I'll talk a little bit about the Bright Start loan on the next slide. This is really the only deferred loan that's out there. And the easiest way to think about this is if you think back to solar a year ago and before, there's a lot of these like 18-month kind of versions of this product. And we wanted to be very intentional when we changed the structure of that loan to really decouple the conversation around the ITC and customize it to the different markets that we have. So as a standard offering, you can defer 25% of the loan up to 50% of that loan. Also, if you're in a market, let's say that has a $3,000 local incentive, you can just defer $3,000. So it's a really customizable loan that allows you to match your local market with the payment structure that you'd like to see for that product. And we do a lot of loans on our Bright Start product. But one of our more popular loans, aside from Sunrise, which is very quickly growing inside here at Sungage, is our level pay option. And that's just kind of your standard cookie cutter flat AM loan that provides you a level payment for the homeowner throughout the entire term of that product. Bright Start, because it's a flat AM loan without any escalators, is really our lowest total cost of ownership product at Sungage. So great way to position that as homeowners that want a flat level payment, or folks that may be cash customers that need to refinance their home or do something to pool money together. You can offer them financing, get that project started, and then the homeowner can pay that off at any time without any prepayment penalties there. For our Bright Start loan, our standard product is 5 to 25 years, but we also about a month ago released a 30-year term for some of our select partners. So another way to continually lower that monthly payment. It's not tied to any AVL requirements, so you still have access to that broad number of manufacturers there. But in a market where you want to offer a 30-year loan, just reach out to your account manager and we can talk through if you would be eligible to have that product. Again, with all of our loans, there's no prepayment penalties, unlimited reams. The goal is really to meet the homeowner, where they're at and make sure that the monthly payment meets their expectations. And then here's another example of just the 3 loans themselves side by side. I think the main takeaway is the cost of solar and the cost of loan is generally very similar. And you can see here that with different payment options, and we're going to use a $50,000 solar loan here, the monthly payment for the Bright Start, if you're going to defer 25% of that loan, would start at $205. At year 3, it goes up to $276. For the level pay option, it starts at $264.52, stays that way for the whole time. Where we're seeing a lot of traction with installers, particularly if you're used to selling conventional TPO with an escalator, is monthly payment starts at $194, and then after 3 years, it's $206. So just trying to show you some comparisons in a similar time frame. You can select loan A for customer A and loan B for customer B. You get the options to really pick and decide what the homeowner wants for themselves. And I think that comes back to making sure that you're doing good discovery with your homeowners. And I think for a lot of reps, it's kind of hamburger, right? You sell one thing, you're comfortable with that one thing, that's what you sell. What tends to happen is 6 months, a year after that sale, homeowners, are talking to their friends that also have solar, and then they realize that there's some other option out there that they didn't know about. And it can really impact your referral pipeline if you don't do a good job of making sure to ask good discovery questions of your homeowners up front. Anyway, long-winded way of me saying we've got a product that can meet most of their needs.
Flexibility.
Yeah, flexibility
Right.
all day long.
Yeah.
One other thing that we've heard from a lot of folks recently is, does Sungage offer battery-only financing? And I know Phil's excited to talk about this as part of our Enerflo integration. But the answer is yes, we do battery-only loans. It's the same exact process, very streamlined, instant approvals, all those things. We do terms up to 20 years. It's the same underwriting criteria of minimum FICO score of 640. Again, we approve roughly 9 out of 10 of folks that have the 670 or higher there. And the max loan amount on a battery only is up to $50,000. We also offer solar plus loans, which way to think of those are, say you're going to do solar and a roof and a battery, or you're going to do a battery project with a little bit of solar as an expansion opportunity on top of that. So our solar plus loans are designed to be really flexible for all of you guys to sell out in the market, where really 25% of the project on a solar plus loan needs to be solar, and that remaining 75% can be a combination of roof and battery. So again, it really addresses folks that have you come out to add a battery, they want to add a little bit of solar on top of that, or to go solar on their roof, they need to add, or to go solar, they need a roof. So we offer all of those kind of packaged into one. We also have a solar plus home improvement, home efficiency option that we're rolling out. So if you're one of our installers that has that as a product offering, please reach out to your account manager and we can talk you through how that product works as well. But both our solar plus and battery only loans are available with both the Sunrise and the Bright Start loan, whether you're going to do the deferred version of Bright Start or the level pay version of Bright Start.
Awesome, Doug. So, question for you. So, the battery only loans, if I'm understanding this correctly, so you can do a battery only loan with a Bright Start loan, or
Correct.
or
Yep.
Sunrise.
Correct. Yep. You can do it for both. And then, and I'd say maybe half the time folks are wanting to add solar as part of that battery increase, then you can use our traditional, solar plus loan and add battery and solar there. So pretty flexible all across the board.
That's awesome.
So a common question that we get a lot is, in a post 25D world, why is Sungage still so committed to solar ownership? And I think, like I said earlier, the reality is 25D is behind us, but solar ownership still has a really great value prop for the homeowner. And there's a pretty meaningful segment of homeowners that are really always going to want to choose ownership. Now, it's on us as an industry to offer them that solution, right? And that goes back to the discovery portion. But ownership still offers long-term savings versus the utility. That hasn't changed. Still offers you the most flexibility as your energy needs change. I'm a great example of this. I've got an almost 12-year-old who is using more and more electricity than I could have imagined. And the cool thing about me owning my system is, now that I'm looking to expand it and add a battery because my wife wants an electric car, I have that flexibility because I own the system, as opposed to a lot of friction that can be caused with TPO, where it's hard to add on to a system shortly after, or add batteries or customize those things. With solar ownership, you get a ton of flexibility. And we've just found homeowners like that long-term versus being locked in to a 25-year contract with the conventional TPO. Another advantage is, if your market has a VPP program with your utility, which are growing across the country, it's pretty cool to see how many utilities in the last 24 months have either added a VPP or in the process of adding a VPP. When you own it, you get to get a lot of the benefits that come with participation in that program. So you directly get the economics. You have say-so in whether you want to allow the utility to use that electricity or not. versus in a TPO world, generally the TPO provider owns the rights and access through that VPP program because they monetize that with the utility themselves. So when you own it, you get all the control and benefits that come with that versus a TPO where the homeowner, they have some resiliency backup, which is an advantage, but they can't really control the economics as well as they can when they own it themselves. Obviously, we're seeing utility rates increase, and this is the time of year where you're getting all the updates about your market and how much the utilities are going to increase. They very rarely stay flat or go down. They almost always increase. And recent history in a lot of markets has been double-digit increases year over year. Through owning, you're insulating yourself through that increase, just as we always have pre-20 or during the 25D era. And then the last point here that I'll mention is the Sunrise and Bright Start loans are really all designed to provide low monthly payments for your homeowner without sacrificing ownership. And again, Sunrise is going to give you the lowest initial upfront monthly payment. So if that's the goal that the homeowner has articulated to you and during the sales process, we have that product for them. If they are looking for a more traditional loan, they can go with the Bright Start level pay. We have that option for them. And then if you have local incentives or you're offering, you like kind of a combo promo financing, we have the deferred version of Bright Start as well that allows you to have a lower initial monthly payment and then options for the homeowner at year 3. So all of these come with full ownership. You're not sacrificing any of the downsides of TPO. And again, I can't stress enough how important it is that we pay you quickly.
Speed to funding, always important, always important. Awesome. Thanks, Doug. Yeah. If anybody has any questions, feel free to just fire them into the chat. We're going to answer Q&A at the end. So as we go along, you're welcome to ask away. But let's jump into a quick demo here, and we'll highlight how easily you can access these Sungage products inside of Enerflo and easily finance them through Enerflo as well. I think I have a pre-recorded demo here, so I'll walk you all through this. Now, for starters, if this is your first time seeing Enerflo in action, I would definitely recommend setting up a time with one of our platform consultants after the call. There's going to be a QR code towards the end of this slide deck that will allow you to schedule that, also allow you to schedule some time with or learn more about Sungage as well. So I'll go over that in a little bit. But from a high-level overview, this is kind of a standard flow inside of Enerflo. On how somebody might utilize it, but as an installer or sales rep utilizing Enerflo as their platform, you can basically configure it to whatever your process is. So we have a lot of resources in here to help streamline your sales experience and boost your confidence getting into that proposal ultimately. So our quick quote, right? So a quick quote is basically a streamlined savings estimate based on homeowners' basic consumption. So whatever products you're financing or that are in your portfolio, you could basically run a quick savings estimate with that customer to see, hey, what's a better fit for them? Loan, lease, whatever. Title check is a functionality where you can actually update that record inside the lead to the legal name and spelling of that customer. So for example, if I entered my lead as John Smith, and on title, it's Jonathan Smith. This is super important from a Sungage perspective. I'm just going to pause it for a sec. You can actually update that record at a click of a button inside of Enerflo to where it'll update everything downstream. So it'll update the credit application, it'll update the proposal, it'll update the financing agreement, it'll update your installer contract. So it ultimately will eliminate the post-sale change order that may happen because of a name change. So super important there. Similar to what Doug was talking about before, which I love that you guys are soft pull all the way. We have the ability to tie into Sungage's pre-qualification criteria. So for example, if you're using Sungage today and you're utilizing our smart pull engine inside of Enerflo, you can actually pre-qualify that customer via email consent or a text message consent and have the confidence going into the deal. Same deal with building out your consumption and your designs. Very simple and easy to do. We integrate with Genability, so your consumption profile is essentially built out to pre-generate your design. We have a lot of different design capabilities inside of Enerflo. So Enerflo is not a design tool. So whatever design tool you're utilizing inside the platform, so whether it's Scanify, it's Aurora, it's SolarGraph, it's Arealytic, we work really well with those tools, and those tools just plug right into the process. And then generating a proposal, very simple and easy. Select whatever design you created, and then I have a couple options already pre-built here. So you can actually be better prepared going into that conversation with that homeowner. So for example, I have the Bright Start 30 year, standard, Sungage 25 year 399, and then I have the Sunrise, 25 year 399. So a couple different options. You can see, how those monthly payments play out, and you're better suited to go into that conversation with the homeowner. But when you are ready to generate your proposal and go down that financing path with that homeowner, all you do is select proposal, and that'll open up our dynamic proposal here. Now, our proposal, highly interactive and highly engaging, and it's all geared to allow the sales rep to modify their presentation based on the homeowner's motivation. So it's very interactive, very educational. You can also incorporate your own slides as well if you had any specific accolades or anything that you wanted to put in there. But I'm gonna pause it because it's moving pretty fast. But there's a lot of engaging slides in here that already come with the platform. So if you want to educate the customer how solar works, or if you want to highlight the benefits of going solar, not going solar, what that savings estimates look like, there's a lot of savings slides in there as well. If you want to modify your design on the fly, you could do that inside the proposal. If you're attaching a battery, that's kind of where this section is right here. A unique battery sizing tool where it allows you to have a better conversation, more educational conversation with that homeowner based on the battery that you're positioning. But ultimately, when it comes down to you're ready to present the financing to the homeowner, that's where this slide will come into play. And on this slide here, it's going to show the product that you had already pre-selected, what the homeowner's going to sign up for. It shows the Sungage, the 399, the 25 year, and this is the Sunrise product, right? So it has all the disclaimers and that are compliant with the lender. Indicating, that it's it'll increase by 2.9% every 12 months, stuff like that, right? And if you want to make any changes at this point, you can easily do that. You can basically unlock this little button here. If you want to add in, some credit guard or any other additional items that you may be adding to the deal, you can do that at that time as well. If you want to change the Sungage product to a different product, you can do that from here as well. But let's say you want to go ahead and apply. Credit application is already embedded here. You can also email the application to the customer as well. So it really will already pre-populate all the information for the homeowner. You can, the homeowner really just has to validate their social security, their date of birth, put in some income verification and stuff like that, and you'll get your instant approval. Now, I know this demo is kind of going pretty fast, but you'll get your pre-approval or the homeowner will receive an email from Sungage directly upon that approval, and it'll basically trigger that customer to go ahead and log into the Sungage portal, fill out additional steps that, may be needed for Sungage to ultimately finance the deal. And then they'll go ahead and sign their contract. But on the rep side inside of Enerflo, this is kind of what that experience would look like for them, where we're going to look at a approved deal here. So I just selected the Bright Start 30 year 399 as the deal to ultimately finance. So you can see from a rep perspective, okay, a homeowner's already been approved. They were approved with some stipulations. These are the stipulations that the homeowner has to go into Sungage and complete. And then ultimately they still have to sign their documents. Once these items are completed, they'll also turn green inside the Enerflo platform. Once those things are done, you can actually proceed with finalizing your project. So you take your install contract, your interconnect paperwork, anything you want the customer to sign. If you want to capture utility bills or any of the other additional stipulations that are pertinent to your process, you could do that at that time. And then lastly, just submitting your project. So this way, when you are submitting a project to your backend operations team, you're submitting a completed packet to them, and you're not submitting, we definitely signed the contract, but the customer, I have no idea if they signed the contract directly with Sungage or not, right? So we're able to capture those things through API inside the platform so that you're set up for success downstream. All right, so that was the accelerated version of Enerflo. So again, if let me highlight this, there you go. Get to the next slide. There you go. So yeah, as we were saying, all the products that Doug has gone over with you today. All those products are available inside the Enerflo platform. So if you're already using Sungage, just reach out to your PSM and we can enable those products. And honestly, you probably could just click the sync button inside of your financing option with Sungage and pull those products directly over through API as well. So super easy for you. If you're on the Enerflo platform, you're not using Sungage today, and you want to talk to Doug Pierce because he's awesome, definitely recommend doing that. Scan the QR code. Outside of that, I think that covers everything. So, Rebecca, I know there were some questions coming through. I don't know if you want to tee those up.
Yeah, absolutely. All right. Let's see. Okay. You mentioned your fast payouts. Can you talk through your disbursement schedule and milestones?
Yeah, great question. So we have generally 3 milestones. So most folks are on like a 90-10 where it's 90% at install. That's when you have glass on the roof, inverters are done, and then 10% at PTO. We have 100% at install. So we have a large number of installers and a volume that flows through on 100% at install. And then we also have an 80-20 path, depending on the market that you're in. There's some different requirements there. I think the important thing to mention around payments is we're very aligned with our installers, right? To make sure that like when you guys get paid, that's also when we start to realize revenue on our side. So not only do we pay quickly, we provide support to your pipeline through your account manager and your partner success manager. And every account gets 2 people. One is focusing on the pipeline to talk you through, hey, this project, we haven't heard from this customer in a while. What's the status on this project? Or, hey, this one's really close to funding. Good job. And we help you guys prioritize your pipelines to make sure that we're letting you know of any, we call them landmines, of like homeowners that have gotten approval but haven't completed any of the steps. We want to let you guys know that so you can, work with us to get the homeowner to sign docs. But it's a very true partnership on our side, and we provide a ton of customer support to make sure that you're getting paid. There's also not a lot of, hey, can I get an update on this project, and radio silence, right? So when you guys have questions about your pipeline, you can call us, you can call your PSM, you can call your account manager. You can also call 844 Sungage, which is our customer line, and you get directly sent to a person. There's not like a phone tree. You're not going to sit on hold. We answer the phone, which is important to do. So quick payments that are very easy to hit the milestone on.
Great. Thank you, Doug. All right, we have another. How does the deferred payment portion on Bright Start actually work in practice? What happens at month 37 if the customer doesn't apply the incentive money to the loan?
Awesome question. So for that loan in particular, essentially it's a promo product for the first 3 years. So if you choose the deferred portion at the end of that, and the way most installers are using that is they're pairing it with a local incentive. So you get the local incentive from your utility or your state or whatever it is, and then you apply that, the monthly payment stays the same. If the homeowner chooses to keep it, which happens a decent amount of time, even in a 25D world where folks were getting a 30% ITC, we just recalculate the monthly payment at that point. There's no back interest, no penalties, none of that. It just basically picks up from there and changes to the new monthly payment.
Awesome. Thank you. All right, we have a couple more. For the battery only loan, what does a typical use case look like? Is this mostly retrofit customers? Are you seeing it on new solar plus storage where the homeowner wants to finance them separately?
Yeah, we don't see a ton of folks wanting to finance them separately upfront. We do have some folks that they want to own their battery and own the VPP portion, and then they want to do a solar TPO project. So if you slice it that way, we could do the battery only portion there. The overwhelming majority are folks that are looking to add resiliency to a previously installed system. Now, whether that's resiliency just for power outages, in some cases it's, like I live in Connecticut, we have a great VPP program here where the utility contributes a lot towards the battery. So, it really is an option in both cases. We also sometimes see people that did a solar plus battery loan with us a few years ago, and At the time, it was really designed more of like a load share, load shaving kind of scenario. And now they want full battery backup and they want to expand that system. So we do a lot of loans where folks are adding on to an existing project to go from being more of a rate case use for the battery to a full backup. So a lot of different flavors and flexibility there to finance all those types of projects.
Fantastic. All right, we have another question. How does the battery only sizing tool in Enerflo work with retrofit existing solar? Take
Can you
that
repeat
one.
that one more time? Sorry.
No problem. How does the battery only sizing tool in Enerflo work with retrofit or existing solar?
Yeah, so in Airflow, it's basically the standard deal flow that you would have, as you would run any other project. The only difference is you're really just manually updating a design in order to access the battery only financing. So, if you have any questions on that directly, or you want visuals on how to do that, I would say reach out to support or your PSM, and we can walk you through how to do that.
Great. Okay, and what does the integration with Enerflo while we're on Enerflo actually save my team in hours, days, or steps?
Say that one more time.
Sorry, what does the integration with Enerflo actually save my team in days, in hours, or in steps?
Yeah, I mean, you can do your financing application in seconds. So once you select your product inside of Enerflow, and you run your application, you get your instant approval from Sungage back through the API. So the benefit there is that even if you were to modify financing product, let's say for some reason Sungage was to decline you or decline that customer, you can easily pivot to another financing option at a click of a button. So you won't have to rebuild the deal anywhere else. You won't have to rebuild your design anywhere else. You'd be able to just adjust your financing option on the fly.
Amazing. Thank you. All right, one last
Mhm.
question and then we'll wrap it up. And this is for Sungage. If we're already running another lender as our primary, how hard is it to add Sungage as a secondary option? And when would you recommend leading with Sungage versus layering it in?
Yeah, great question. So I think one of the core values that we have is we preach diversification all the time, right? We've been talking about diversification now for months and months and months. And I think as business owners and even sales reps out there, you need to have a lot of different financing options out there. Like there's going to be different sweet spots for different customers. So the good news, short answer is get signed up, right? Meet with us. We can go through our product offerings, see where there's a fit for us inside of your existing sales process, train you on our overall product mix. And I think the other kind of big thing, and I had someone just text me this question, is we have some strategic partnerships directly through Sungage that are exclusive to Sungage through different distributors. Green Tech's a great example, Baywa is a great example. And on the Baywa front, we have a non-fiat balance of materials partnership with them that will get your panel, inverter, and racking as low as 76 cents a watt, which is like a 30 to 50 cents per watt savings from a fiat domestic content type product. Also have some similar stuff at different profit centers at Green Tech as well. So two really great partnerships. But at the end of the day, what that allows you to do, and this is part of what we would train you on through onboarding, or if you're existing and need to just get a refresher, we're happy to do that as well. But it allows you to kind of remove a ton of the cost that comes with needing to meet the FIAC and domestic content requirements, which just come at a premium. That just is what it is. But offer a very similar monthly payment to your homeowner that you would see with a conventional TPO product, and then give them all the benefits of ownership that come with that. So I think, Sungage, when you're thinking about like, should you partner with Sungage or not, there's folks that we're going to meet with and say, hey, based off your business strategy, like maybe keep doing what you're doing. It seems like it's working. And there's times where we're going to find a solution that maybe is a bit eye-opening, and you're gonna find that offering our loans and solutions make a ton of sense. And I'll tell you, the distributor partnerships are very, very new. We're about maybe a month in on a few of these, and the amount of traction that we're getting is pretty remarkable, where when you sit down and do the math side by side, you really can still offer your homeowners that really low monthly payment, and then all the flexibility that came with ownership that you liked in a 25D world. So post 25D, I think there's a lot of folks where it's like the tax credit is out there in this ecosystem, but not over here on the loan ecosystem. I'm here to tell you, you don't really need it. Like there's a way to shave enough cost out of what you need to do to meet the requirements over here, where ownership can continue to be a really great option for your homeowners.